is my chat with the ultimate go bug, I call him, Johnny from Maison Placements in Toronto. John has often appeared in BNN and other media business channels to talk about gold investments, among other things. So let's welcome John here. I know you're anxious to join in with me here for the fireside chat here.
Oh, Gilbert, how are you?
How are you, John? Yes.
Just
So
terrific.
great. So let's dive into a few things. Obviously, with you being here, gold being up, continue to stay up here this year. Maybe you can just start off saying, like, we're already on up over $3,000 now. So why is there another surge in this, for the past few months since the new year? And any reason why?
Well, the classic line, Gilbert, this is the Trump trade. Everybody thought when Donald Trump got in that it would be good for business, that prosperity be around the corner, jobs would be made. What we have, unfortunately, as we see with tariffs, that there is the possibility of an economic recession, not only the United States, but fears of a global recession. Then you couple that with the fact that he has grabbed power in a very short period of time. And now Congress is very pliant. We have the courts, which have only just now been testing his power. He has grabbed more and more power. And in fact, there's fears that there is no guardrails. So that, as I think there's a chart on chart number 2, if you just show you, there was euphoria when Trump got in, and then that there's a realization that in fact he's not necessarily as good as for business. That chart is
Yeah. Number two, my colleague, yeah, he's just trying to get that out. Yeah. Thank
that's
you.
right, and you could see the performance of the market or the lack of performance of the market. What is very disturbing is that it continues to look lower. Now, chart number 3 shows one of the biggest beneficiaries of this confusion, and that is gold. And it's there's no coincidence that the arrival of Mr. Trump and gold has taken off. Gold, as we have seen, that is really a hedge against uncertainty. It's a hedge against inflation. And inflation all along has been percolating along. And there are fears, Gilbert, that what we could have with higher tariffs is higher inflation. And that means higher interest rates, which is not good for the economy. And then in chart 3, if we could just go to that chart, Gilbert.
Yeah, chart 3, please. Next slide.
We have the world at war. Yes,
Yeah, this one.
that slide. We have a war, a world where, in fact, yes, there seems to be some sort of peace talks going on in Ukraine, but the end result is that Russia is really looks to be the winner here. And number 2 is that Europe is very nervous about what's been going on with the pivot towards Russia. So what we have is that the Europeans are now arming up, and in fact, even Canada, we are talking about in this election about raising defense spending. And defense spending around the world has been really only the United States and China in the last 10 years have been spending on defense. Everybody else has taken what they normally would spend on defense and spend it what they call the peace dividend. And they have been able to, carbon, net zero, the greening of the world, all that money for battery plants came from what would normally be spent for defense spending. The irony of it, Gilbert, is that in the United States, what the American budget shows is that they have almost $1 trillion in interest costs alone. And what do they spend on defense spending? $1 trillion. So what we see is that the creeping costs of America's debt is now becoming a problem. So we have this world at war, and then that has caused yet another sort of uncertainty with respect to the markets.
Yeah, great for you to point out that. You mentioned obviously Donald Trump, the 2.0 seems to be more terrorist than ever. My question is, why do you think he keeps doing it more now? And shouldn't be he smart enough to know terrorists are detrimental to his own economy and increasing the inflation as well as you said? Like, is he just, why would he keep doing it?
He is not a crazy man. He has support of more than 50% of the American population. So there is a deep rooted desire and need for jobs. There's a deep rooted desire for, they have an immigration problem, just as we do. And there is a deep rooted desire for prosperity. And he offered that hope. However, the chaos everybody thinks is a means to an end. But that, what people should ask is, what if that chaos is the end itself? Maybe that's the grand design. There's no logic in it. The logic, I believe, is that what's important for him is to get power. He's got that. What's important for him is to remake the United States. And he is doing that. He hopes to boost jobs. I don't think that this will boost jobs. This will cost jobs. I think that he hopes to bring down inflation. Well, inflation is going up. So the ultimate guardrail, Gilbert, will really be inflation itself. But that we won't find out for another at least few to 6 months. So my sense is that the markets are going to be very messy for the next year, perhaps even longer, because there are no guardrails. The ultimate, however, Achilles heel of the American economy is debt. They have the largest debt in the world, $37 trillion. And in other times, he might be able to do this experiment. But in fact, the reality is that the Americans have been printing for so much, for so long, and so much that that's showing up in the US dollar, and the US dollar has been going down.
So for what you're seeing, all these happening, the inflation, the economy struggling, so you basically a believer that gold will continue to do well, I guess, right, for the next little while. Is that
Well,
correct?
as you pointed out, Gilbert, that gold has gone up 13% year to date. Last year, in fact, it's gone up 27%. Everybody thinks that we're at the peak. Everybody thinks that we are sort of at the top. Well, really, I can recall, and you weren't around back then, but in 1971, gold went from $35 to $850 an ounce. And it peaked at January 80. That was up 2,300%. I can recall that even before the 1973 recession, gold went up. Before the 1980 recession, gold went up. And then after the crash, the 2008, you were around for then, gold went up to $1,000 an ounce. So the reality is that when you think about when there are uncertain times, take COVID. COVID gold hit $2,000 an ounce when COVID came around. So when we look at the just the last little while between 2011, Gilbert, and gold went, I can recall, from $252 an ounce to $1,900 an ounce. Everybody said that was a peak. That's up 653%. So we had the 1971 period when gold went up something like 2,000%. We have 2011, that period, gold went up 653%. When we have, when gold's run from last year, it's only up 58%. So we have a long way to go from that perspective. Gold is the ultimate insurance policy. That's the lesson.
For sure. Let's focus a bit on Canada, where we are here now. We're having the election soon. So do you think the election will sort of have, make the uncertainty goes a little bit away at least because we have no real government now and we can maybe help us out in our own economy because Canadian economy is struggling big time too.
Well, there's reasons for the Canadian economy struggling, and that is because we've had mismanagement, we've had barriers to growth, we've hurt our basic industries. The question that you ask is, will the election help? Will bring this to an end? Unfortunately, this is like a super tanker. It's going to take a long time to move around. We have a foreign policy that whereby we depended on the United States, and now we find out that they want to make us the 51st state. We have a foreign policy which made Chinese investments unpopular. In fact, we accuse them of a whole bunch of things when we had arrested one of their key citizens for because the Americans asked. And what did we get in return? We got nothing in return. Um, China is the biggest market in the world. We have more or less been blocked off. We have a foreign policy that makes Chinese investment, which is we need it in our resources. We need those investments, and we're not going to get it now from the Americans. So we should think about encouraging investment, no matter what the color of the investment is. But I don't think those policy issues will be tackled during this election. So unfortunately, it will be the same as usual. And that means we are a second tier country and we have a lot of great prospects, but we were once one of the top gold miners in the world. Now we're not even number five. So we got to think about some serious thinking about our natural resources and our role. So the election is important, no question about it. But we have to think more about the economy.
Yeah, so you touch upon that. Was about to follow up with you on the question being Canada, because we're one of the top gold producing mine natural resource companies in the world and the top producing countries in the world with $3,000 and up. We should be making printing money, almost like cash flow. Like this country should be really wealthy, but in fact we're not. Like what's the biggest threat? What's stopping us from being that country?
Well, unfortunately, Gilbert, what we did was we hollowed out our investments. A lot of our gold mines, our biggest producer in Canada is like Eagle Eagle. And they have prospered. In fact, they're getting $4,000 an ounce for every ounce of gold they produce. However, we made it very difficult, even in British Columbia, your province. How long does it take to get a gold mine or any mine into production? The lag time, the lead time is like 15 years. So I've seen countries that have shortened it. You can get a gold mine up and running in less than 3 years, but the permitting process is just horrendous. Go to number five, slide five, Gilbert, and I'll show you why this is important. This is a chart on the top 10 countries by gold reserves. You see the US with 8,133 tons. Do you see Canada anywhere? Canada's not there. Why? Because we sold our gold out of the gold from our reserves. We did that, and we what do we have? We have U.S. dollars. So, and we've showed our own industry that we're not really supporting it. China has become number five. They have been buying. They are actually the last 6 months they have bought more gold again, and around the world, central banks have bought something like 20% of the world's production every year for the last 3 years. Where is Canada? We have not been buying gold. The reality is, I think, is central banks are very concerned about the US dollar, and therefore they have been buying gold as an alternative to the US dollar. We have seen whether Russia has been sanctioned and other countries have been sanctioned by the Americans. And so gold is a way to avoid that. Today, in fact, as far as physical gold, there's been a shortage of physical gold, so much that gold has been flown from London to the New York, and because there's a $30 premium, there's a tightness, and there's a belief that, in fact, central banks one of these days will monetize and go back on to possibly the gold standard.
Great. Let's spend the last couple minutes talk about some more micro, talk about stocks, about companies.
I just want to show you. I could just want to show you one other chart is chart number 6.
Number 6. My colleague, slide number 6. Yes, coming up.
And there is the ultimate. What is likely to happen is Donald Trump is a believer in gold and in the gold standard. And that is one reason why he and Elon Musk are going to review Fort Knox and to see whether, in fact, the 5,000 tons of their 8,000 tons that they have is, in fact, there. And one of the reasons that is being explored is that one of these days, the Americans get out of their financial mess by using a basket with gold. And that's why they want to make sure it's there.
Great.
That's why I think gold, not only is gold wanted by jewelers, by our house, by our wives, but in fact, gold has a monetary aspect. And so the tightness is there because, frankly, we are not mining enough gold. The miners are not replacing their reserves. And because they are not replacing their reserves, every year, Agnico Eagle produces 1 million ounces. They have to find 1 million ounces. So it's very difficult. China is among the largest producers in the world. China's problem is that they are running out of reserves. They consume more gold than they produce. That's why you see companies like Zijin and that have been going to Colombia and buying other gold mines because China does not have enough mines. We have countries now realizing that they need to boost their reserves, and there is a shortage of gold mines.
Great. One last question before we go. I want to turn your page into your past experience because you in the gold investment business for over 50 years. Correct me if I'm wrong. So you must have gone through a lot of case studies. So any particular case or company or asset that you think that you didn't think the asset was good enough or the things, but actually the management outperform and make it happen, sort of beat your expectations. Can you share maybe a story of that at all?
Well, in the gold mining business, Gilbert, is that, and nothing has changed, is that everybody thinks they have a gold mine in their backyard. At PDAC, for example, there were 27,000 prospectors, people involved in the gold business. Everybody thought, frankly, that their gold mine was the best, was going to be a gold mine, or it was going to be the best. We had in the past Bre-X, where it was to be the world's biggest gold mine of 50 million ounces. Well, in fact, 100 million ounces, and it was a fraud. I have found that over the years that there's a lot of arm waving, there's a lot of expectation, there's a lot of hope. There is no secret sauce to finding a gold mine. And there's a need for a lot of drilling. A lot of companies say we've got a geological theory that, in fact, the gold is there. Only God knows what's in the ground, so you have to drill it to find out. And in fact, think of raisin bread, Gilbert. That gold is like raisin bread. You have to drill it off in order to find out those little raisins. And too many companies, or a lot of companies, have different theories, but you have to drill them enough. And then even after you find it, then you have to finance it. And financing it's a little easier today, but I can tell you in the last 2 years, financing gold mines, financing even a cobalt mine, a rare earth mine, finding a copper mine is very difficult. And the reason why is because if you go, there's a chart that of, I think it's number 11. If you go to number 11, chart 11, you will see that in fact, the assets of the world today, gold assets, as a percentage of the global assets, are minuscule. I have been around. I can recall in the 70s and 80s when gold would be a part of more than 20% of one's portfolio. Um, some of the big gold funds in the States, I can recall in the 80s, they made it a rule to have 10% of their assets in gold stocks. Today, it's a fraction. So really, it says to me two things. One is that gold stocks have and the shares have much lower room on the upside. But two is that the world, while we think we're talking about, we realize that gold is $3,000 an ounce, that in fact, as a percentage of assets of everybody, it's very, very small. It should be 10%. You should have 10% of your assets in gold and gold stocks. And think of it as fire insurance. You don't want your house to burn down. You just want it as insurance. And in this world where there's so much uncertainty, definitely gold has that role for not just 50 years, 100 years, but thousands of years. Gold has maintained that role. Our problem is we're not finding enough gold.
Thank you, John. Wonderful to be speaking with you and have a chance to catch up and all talk about all the crazy things happening surrounding the gold market. But thank you for your time here with us.
Good to be here.